Hey there, investor. What if I told you there's one company in the world without which Apple couldn't make iPhones, Nvidia couldn't create its AI GPUs, and TSMC couldn't produce the most advanced chips on the planet? This company isn't a tech giant you see every day. It works behind the scenes, in a tech monopoly so complete that its closest competitors are literally decades behind. Today we're going to take a deep dive into ASML Holding, the Dutch company that holds the key to the future of the semiconductor industry. In this video, we'll uncover what exactly ASML does and why its technology is so unique. It's almost unbeatable economic moat that protects it from competition. The brilliant business model that generates revenue for decades. The main risks and the biggest opportunities for the company. Our goal here is to understand the basics of one of the most dominant businesses in the world. If you want to understand the pillar that supports the entire tech industry, stick with me until the end. What ASML really does? The magic of lithography. To understand ASML, we need to understand lithography. Think of it as an extremely advanced photo printing process. But instead of printing photos on paper, ASML prints tiny circuits onto silicon wafers. These patterns are the transistors, the building blocks of any chip. The smaller and denser the transistors, the more powerful and efficient the chip. It's the famous Moore's law in action. ASML dominates two types of technology. DUV, deep ultraviolet. This is the older technology, but still extremely important and profitable. It's used to make most of the chips in cars, smartphones, and electronics today. ASML has competitors here like Canon and Nikon, but it's still the market leader. EUV, extreme ultraviolet. And here is the crown jewel. ASML is the only company in the world that has managed to master EUV lithography. EUV light is so energetic that it's absorbed by almost everything, including air. That's why the entire process has to happen inside a perfect vacuum. The light source is created by firing a very high-power laser at a tiny drop of tin, 50,000 times per second, creating a ball of plasma hotter than the surface of the sun. This complexity leads us directly to the most important point for an investor: ASML's economic moat. The unbeatable economic moat. Warren Buffett loves companies with economic moats, barriers that protect against competition. ASML's moat isn't just wide, it's an ocean. It's built on three pillars. Pillar 1, intangible assets and know-how. EUV technology wasn't created overnight. It took decades of research and billions of euros in investment. ASML coordinates a network of over 800 suppliers with the German company Carl Zeiss, which produces the most precise mirrors in the world, being the most critical. Jos Benschop, ASML's vice president of technology, said, "You could put 10,000 smart people in the same room, give them all the blueprints of our machine, and the machine wouldn't work. Some things just aren't in the blueprints." That's know-how. It's the accumulated experience that's impossible to copy. Pillar 2, huge switching costs. Giants like TSMC, Samsung, and Intel don't just buy machines from ASML. They design their entire factories, which cost over $20 billion, around ASML's technology. Switching suppliers would mean redesigning the entire factory. Plus, the machines need to operate 24/7 with over 95% uptime. Any unplanned downtime costs millions. No customer would risk stopping their production to test an unverified supplier. Pillar 3, R&D cost advantage. ASML invests over 4 billion euros per year just in lithography research and development. Its closest competitors, Nikon and Canon, invest a fraction of that in their lithography divisions. The technology gap isn't shrinking. It's growing every year. It's virtually impossible for anyone to catch up. The business model: sell once, profit for decades. ASML's genius doesn't stop at technology. The business model is equally brilliant. Selling a 300 million euro machine is just the beginning. An ASML machine can operate for over 30 years, and throughout its entire lifespan, it generates recurring, high-margin revenue through services and maintenance. These machines are so complex that only ASML can maintain them. It's a guaranteed revenue stream. Software and hardware upgrades. ASML sells updates that increase the productivity of older machines, a fantastic value proposition for customers. Think about it. An old DUV machine generates over its lifetime 130% of its original price in service revenue. And for the new, more complex EUV machines, the projection is over 150%. In addition, ASML operates like an assembler. It designs the system and integrates the best parts from the best suppliers. This gives it cost flexibility, which is crucial in a cyclical industry like semiconductors. Bull versus bear arguments. The investment thesis. No investment is without risk. Let's look at both sides of the coin. The optimistic side, bulls. 1. Lasting monopoly. The economic moat we've already discussed is the main argument. The switching costs and technological leadership are immense. 2. Service revenue growth. As the installed base of EUV machines grows, the recurring service revenue, which has high margins, will explode. 3. Megatrends. The demand for advanced chips is being driven by artificial intelligence, 5G, IoT, and data centers. All these trends need ASML's technology. The skeptical side, bears. 1. Geopolitical risk. This is the biggest risk. ASML's machines contain American parts, which gives the US the power to control who ASML can sell to. Export restrictions to China are already impacting the company and could get worse. 2. Cyclical nature. The chip industry is famous for its boom and bust cycles. In a recession, customers like Intel and Samsung might delay buying new machines. 1. Customer concentration. ASML relies on a few customers. TSMC, Samsung, and Intel account for more than half of its revenue. Any problem with one of them is a problem for ASML. 3. Supply chain dependence. Although well managed, the company depends on single suppliers for critical parts, like Zeiss. A disruption in their production would be a huge bottleneck. Financial health and capital allocation. How does ASML's management use the company's capital? The answer is, in an exemplary way. Solid balance sheet. ASML operates with a net cash position, meaning more cash than debt. It keeps between 4 to 7 billion euros in cash to get through any cyclical crisis. Smart capital allocation. Management has a very long-term vision. In the 2010s, they needed money to finish EUV R&D. What did they do? They sold a stake to their own customers, TSMC, Intel, Samsung, aligning everyone's interests. They also made crucial strategic acquisitions such as Cymer, the EUV light source, and HMI, metrology, which further strengthened their position. Shareholder returns. ASML rewards shareholders through dividends and mainly a robust share buyback program. Since 2013, the company has already reduced the number of outstanding shares by 10%. Conclusion and future outlook. So, what can we conclude about ASML? We are looking at a unique company in corporate history. A technological monopoly built on decades of innovation, strategic partnerships, and a relentless long-term vision. Its economic moat, based on proprietary technology, switching costs, and a huge R&D advantage, seems unbeatable in the next decade. The business model, which combines the sale of very high-value equipment with recurring service revenue, offers a combination of growth and resilience. The megatrends of artificial intelligence and global digitalization are acting as tailwinds, driving demand for increasingly complex chips that can only be manufactured with ASML's machines. The risks, especially geopolitical ones related to tensions between the US and China, are real and should not be ignored. The cyclical nature of the sector also requires a long-term investment horizon. But fundamentally, ASML doesn't just sell machines. It sells the ability to continue Moore's law. It sells the next generation of technology. For any investor looking to understand the foundations of our digital world, understanding ASML isn't an option, it's a necessity. What do you think? Is ASML the safest monopoly in the world, or are its risks too great? Leave your opinion in the comments. If you like this analysis, don't forget to hit the like button and subscribe to the channel for more videos like this. See you next time.